Alrighty, now onto a more serious topic. Did you know that in 1 year, 1 in 6 Australians will experience elder abuse? This shocking statistic comes from the Australian Institute of Health and Welfare, and it highlights a growing silent issue, which is often financial in nature. Now, someone that recognises this as a serious problem and is calling for collective action is the CEO of Heartland Bank Australia, Michelle Windsor, who joins us now. G'day, Michelle. Welcome to the Savings Tip Jar.
Thanks for having me. Great to be here with you, Dom and Harrison.
Thanks for joining us, Michelle. I understand that elder financial abuse or raising awareness for it is a bit of a passion topic of yours. But before we launch into that topic, do you have a savings tip for us?
I have been in banking for several decades, and so my savings tip for people is to have a budget. So understand exactly where your money is going, what you're spending it on, and have a budget and stick to it. And now, having a budget doesn't mean you can't treat yourself at different times, but you really need to know where your money is going and how you're spending it. And then there's ways to think about how to do things a little bit more economically. And so once you understand what you're spending, you can actually set that up.
Yeah, absolutely. That's an oldie but a goldie, that savings tip. Definitely having a budget has got to be one of the top things that you've got to have if you are going to save. So thanks for that one, Michelle. All right, so getting into the topic of the day. So I guess Heartland Bank, it somewhat specialises in banking for older Australians. Being the CEO of Heartland Bank Australia, you'll sort of see, firsthand what's going on with this topic here with elder financial abuse. So I guess with that, can you sort of tell us, Michelle, what this actually looks like and feels like? Like, how do we know when someone is being financially abused?
Yeah, it's the sad part of society at the moment, unfortunately, where, as you said at the start, Dom, 1 in 6 people, elderly people, are actually suffering from elder abuse, and it's really sad. We've actually got a lot of people who have assets, and we do have cost of living crisis in the country at the moment, and certainly in the country. And so some people, what they're doing is they're taking advantage of elderly people. So the true description of elder abuse is either a single or repeated act, or sometimes even not taking action when you know that somebody is taking advantage of somebody, usually in a relationship with them. And it's normally when there's an expectation of trust in that relationship. I think that's a really important facet of it. So often elder abuse happens within a family or with somebody who is a carer or looking after elderly people, and they see that they've got maybe an asset that they could do something with, or they might have money that they can actually take from them, and they're taking advantage of people. Unfortunately, it's very sad.
For sure. Now, you touched on this in your answer just then around, it's quite often the case where people think that crimes happen by a total stranger, whether that's, an assault or a murder or elder financial abuse. Now, you touched on this there. It's not really like the boogeyman, although there are scammers out there, but it's more homegrown. Can you explain sort of what that looks like and what sort of banks are doing to identify those sort of homegrown family member-led instances of elder financial abuse?
And we need to be really clear. There are those people who are random, who are ringing up our elderly people in the community and trying to get them to send money to them. So there are certainly those examples in there. So unfortunately, what can happen is family members are, if elderly people, they're seeing that their family or the person they're caring for may have funds available. They're either, taking control of their accounts or taking money out of their accounts. From our business, what we see is, we have a reverse mortgage product, which is where a customer has or a person has an asset and they're unlocking that equity in the asset. So we certainly work very hard to identify that if it is that the elderly person who's actually needing those funds, or if there is somebody who is taking advantage of an elderly person. So all the banks are trying really hard to protect the elderly. They're doing a lot of things, and we ask lots of questions of our customers just to make sure that they are doing this willingly, that they know what they're doing, that they understand the process, and that they're not under any sort of duress from anyone. And often if there are romance scams out there, and so we ask lots of questions and try and make sure people understand exactly what they're doing. And if we suspect it, then we will take further steps just to make sure that that person is protected.
Michelle, I wanted to expand a little bit more on just when you mentioned the reverse mortgage product. I mean, it sort of goes hand in hand with like this sort of aging population. In that there's a lot of older people at the moment that are experiencing the effect of being asset rich and cash poor. And I guess they get a lot of stick. Some of these older generations from younger generations go, oh, these guys had it so easy. They've got so much money now. And perhaps that's leading to more cases of elder financial abuse. But I just wanted to ask you your thoughts generally about reverse mortgages as a solution to this problem of being asset rich, cash poor.
Yeah, it's interesting. Every generation thinks that the generation before had it really easy, and I'm pretty sure that there's a lot of things that the elderly or certainly the customer base that we have had it a lot tougher than what we have in society today. So it's really interesting. So there are multiple solutions. So those people who have worked really hard all their lives and they are lucky enough or fortunate enough to have an asset. And what the reverse mortgage product does is often those people are struggling to live day by day. They don't have an income. They are often struggling to pay for medical bills. They might have to refurbish their home to make sure that it's wheelchair proof. They might need a new car. They might be struggling just to pay their everyday bills because even though they've got this asset, they don't necessarily have the cash flow to actually be able to support with life. So a reverse mortgage is a solution that can help them to unlock that equity. And there's various different reasons that you can actually get a reverse mortgage, and it can just make sure that those people can live life the way that they choose. And it's really important. A lot of the elderly really want to stay in their home, and they often want to stay in their home because their children grew up there, they want to bring their grandchildren there, they're familiar there, they're really comfortable, so they want to stay there. But unless they can find a way to unlock that equity they've got in the property, then they can't generally stay there. Generally the only solution they've got is to sell the home and use the funds for an aged care property or something. So it just gives them choice as they age to live life the way that they want to.
Now, Michelle, in New Zealand, where Heartland Bank is originally from, there's a universal pension. It goes to someone regardless of their, assets or income level. And this is unlike Australia, which is means tested. I'm going to ask a bit of a prickly one now. Do you think that this is sort of part of the issue? Like a lot of older people are hesitant to move out of the home due to like holding costs and then having cash flow impact their pension, necessitating the need perhaps for a reverse mortgage. To what extent do you think maybe governments need to tweak their rules around this sort of topic to enable older Australians to feel more financially free?
It's a really interesting one. So there's big differences between Australia and New Zealand. So you're right in calling out the pension difference. That's a big difference. But we also have a very big difference in the superannuation actions or plans that are in place in Australia compared to New Zealand. So, in Australia, they established the superannuation contributions that all working Australians have to contribute to their superannuation. New Zealand don't have the same superannuation laws around that. So, each government has done it different. I'm not here to say that the government needs to actually make changes to that, but we do need to understand that, a lot of people have got assets sitting here that you're absolutely right. They, if they had the funds from the sale of that property, it might very well impact on their pension. But we also need to understand that even though there's a lot of people who have got that asset who might not even be getting a pension. So there's lots of different parts of it. I think there is some solutions that the government have provided. You know, it's the Home Equity Access Scheme, and that helps people to access some funds there as well that can support. But each of the governments are looking at the solutions in a slightly different way. And you know, we've got to, we as the population in Australia grows so rapidly and the aged population in Australia grows so rapidly, we really need to make sure that we have multiple plans in place to support the aging population, because we're going to have a whole lot of people who I think the numbers of people, it's growing 5 times those people who are going to be over 65. That's a big amount of people who are going to be in that demographic.
Now, Michelle, I just wanted to talk more generally about Heartland Bank. I mean, as has mentioned, you guys originated from New Zealand, and when you first came to Australia, it was really more just as a reverse mortgage provider. But then since you acquired Challenger Bank last year, you've now become an ADI, as in a bank, which means you can accept deposits. I just wanted to know like how that's going, because you know I was having a look at your products and I noticed you guys have a pretty competitive savings account rate of 4.5% on up to 300,000, which I noted is an ongoing rate rather than a bonus or intro rate. And you know that's great to see, because I mean I've harped on about this and had a lot of whinge sessions on the podcast.
He really has.
About how there's so many you know, hoops you have to jump through these days in order to earn a decent rate of interest, and we don't see these sort of nice, solid, ongoing rates of interest. Is that sort of what you're hearing from customers, that they appreciate that sort of high ongoing rate?
Yeah, absolutely. Thanks for calling that out, Dom. We appreciate that. That's absolutely what we're trying to do. So what Heartland Bank in Australia is all about is providing solutions for people where they can't easily get those solutions elsewhere. So we have a very niche product set. You're absolutely right. We have reverse mortgages and we have a couple of savings solutions. So we deliberately went to market with our high interest savings account with no hoops. We absolutely wanted to be different to everyone out there. We recognise how much, you know, we wanted people to have a solution that provided them with a really good return. And you're right, now that we're a bank, we can actually provide those things and present solutions that actually give back to people and give them better offerings. We also have term deposit offerings, which you would have seen on there, and we try and our rates are usually incredibly competitive. But again, we don't have your general transaction account. So we don't offer your full range of banking solutions. We only offer a handful of solutions, again, to be offering best or only solutions, something that's a bit different to everyone else.
Certainly a growing topic of contention among our listeners, Michelle. I think a lot of people are growing more and more fed up with having to jump through 11,000 hoops. So it's good to see another product out there with a pretty competitive rate and minimal hoops to get there. And another, you know, sort of fuss-free suite of products as well, in term deposit and reverse mortgages as well. Nice little plug there to end on. Michelle, thanks so much for joining us on the Savings Tip Jar podcast.
Wonderful. Thanks for having me, Harrison and Dom. Appreciate it.